Good afternoon, Chris Robinson, Robinson Ag Marketing with your afternoon closing comments for the grains and livestock. Let's lead off with the positives on the day. Net change in D's corn up 2 3/4 cent, managed a settlement at 397 and a quarter. Nice to see us hanging in there after that, horrendously bearish USDA 188 yield, 16.7 billion bushel crop news that we got yesterday. So to see us still sitting here at $4, I take that as a victory. The worrisome level would be if we take out 392. 392 would be a new low. That was the low yesterday. I'm more concerned, honestly, with how we settle on Friday. Lots of times after these reports, especially something where it was kind of shocking, it takes 2 or 3 days for people to figure out exactly what it is, what they're going to do. We'll see what the managed money does. It's probably going to be the key here moving forward. With November beans, we did finish up 11.5 cents at 10.44 and a quarter. We finished right back. Remember the July 4th weekend? We had gapped lower and kind of never looked back. That was the level that we ended up settling out here. This 10.44 level, the high was 10.47 and a quarter. Really nice to see that. You got to remember the high of the year. We were there twice and failed twice. Will we get back there? It sure feels like we want to. That cut in acres really surprised a lot of people. The acres that farmers didn't plant beans, they planted in corn. So that's probably in the cards there. 1074 and a half. We were there in February, and then in June we hit 1074 and a quarter. We're at 1044 and a quarter. That's only 30 more cents to go. If I'm a producer and I've got nothing sold, this is the universe is smiling on you. It's much better to be talking about 1050 beans than we were all. Let's face it. 2 weeks ago we were worried about 950 beans. So there's the blessing there. Hopefully you're not too oversold. If you did sell something and if you haven't reowned it, I have no problem with you reowning it here now. We'll have to see how far we can go. Can we get an $11 print? I think the stars would have to line perfectly for something like that, but it certainly is possible given the data that we got with the acres and the yield. So we'll see how that turns out. Kind of a quiet day in wheat. We really didn't have anything shocking in the USDA to deal with. I think it was more beat up by corn than anything else, and I think that experience has taught me anyhow that for right now, probably as corn goes, wheat will go. So we did see a new contract low overnight in December. Chicago, we did trade as low as 523 and a quarter, but we finished the day at 528 and a quarter. That may just be wishful thinking. That market's been trending lower for quite some time. We'll see if we can get some recovery. Again, I'm more concerned how we settle on Friday. So December Chicago finished the day up 2 1/4 cents at 528 and a quarter. December KC finished the day down 2 cents at 528. It did hold 525. And East Minneapolis spring wheat still under $6. We poked our head above $6 earlier today, 602. We did settle down at 595. Again, there was nothing horrendously bearish from that USDA report for the wheat. If I'm looking at these Minneapolis wheat right now, I mean, are you going to tell me a month from now that 590 was the double bottom that you all had to buy? I have no idea. I do know that if I'm a producer, I want to make sure that I at least hedge against the possibility that we continue to grind lower. Moving over to the livestock, a $7 trading range today in feeder cattle. We couldn't get the 350 print. We got the 349.825, and we slammed lower. And I mean, we slammed lower. This afternoon, it looked like it was going to be another big down day like we had last week. But we did manage to come back and bounce $4 off the low. Kind of finished right in the middle of the day. 346, 625. So right there, we did manage to end the day in the green. Pretty good recovery there. I do believe that you don't have to be a rocket scientist to know that 350 is going to be the level here. We'll probably take a look at it Thursday or Friday. We do know that the funds are long cattle. They've been long cattle for a long, long time. They've caught a big chunk of this move. At any point, they could decide to, hit the road. And you got to also remember they're long a bunch of futures, but trust me, they've got puts on because they may just exercise puts against their position, just like I suggest farmers do. I mean, ranchers do because it's much easier to have a put on. You don't get stopped out. The market can whip down $7 and your put's still sitting there as your safety net. You don't feel like, oh, I have to sell the board. And that is a big thing that I'd stress, and I stress in my members only seminars that I give, and also on my members only podcast. We really dig into the reason why a put option is a producer's best friend. You don't have to be day trading. You set the floor. You let the market do what it's going to do. You don't feel like you have to make a bad cash sale. Just for instance, when we were down on those lows in November beans, a put option, if you spent 10 cents, it kept you from making a bad sale, and then you get the benefit in the 40, 50-cent bounce. That is the way put option is supposed to go, especially for producers. For a producer, you're just like the guy that used to step on the floor. I spent 15 years on, actually 18 years on the floor, and then I left the floor in 2009. But there were guys who would just walk in and buy 100 contracts and go to lunch, and come back at the end of the day and see if they made money or not. That was nuts to watch. But then I found out later on that most of them, when they bought their 100 contracts, they'd have a sell stop with another broker, and they would leave. They made their decision for the day. They had their sell stop, and possibly they were using puts. And the same thing, if you're going to make a big bet, and if you're a producer, you're making a huge bet, the best way to defend against getting run over is having a defensive hedge. So that's what we talk about all the time. If you're looking for help, 312-638-8868, Chris Robinson. We'll get back at it tomorrow. If you like listening to this, sign up for it all the time. You can go to my website, Robinson Ag Marketing, and sign up there as well for my daily letter. Take a look at it. I hope you enjoy it. Take care.